All right. Today we were up 0.06% on SPY, and we are now back above the 50 daily EMA for the second day in a row. So if I move these arrows over, we are still in the same range, and that range depends on whether we are above or below 542. Above 542, we're looking for a push to the top of the range at 548, and then if we break above the top of the range, we're looking for a push to 553 to 556. If we cannot hold above the 50 EMA and this support zone right around 542, then we are looking for the gap close below at 537. So above or below 542 should be all you need to know if you're a short-term trader, but if you're a longer-term swing trader, these are still the opportunities to accumulate swing trades, because I do believe we are getting very close to an everything rally, and we're going to see a lot of stocks moving higher very soon. And when you're getting odds stacked in your favor to move higher over the longer term, then you do want to focus on loading up those swing trades with those low risk entries. Remember, in order to get low risk, you do have to take on risk. And that is why you're able to get that high reward with the low risk, because a lot of people are going to be very nervous and very scared to buy the dip. They're buying into the fear mongering that has kept them on the sidelines the entire bull market. And keep in mind, this bull market has gone back all the way to 2023 off of the 2022 lows. And if you cannot get over the fear that the market might go lower while you're accumulating long, then you just have to be comfortable knowing you'll never get that very high reward trade. Everybody is going to have different risk tolerance. Everybody is going to have different trade strategies. But this is my YouTube channel, and I teach you what I like to do and how I like to trade. And that is why I'm telling you I'm very confident this market will be going higher, and these are opportunities to continue to accumulate swing trades, knowing that you always need a risk management strategy in place, knowing that if we continue to go lower and we start to break through some of this support, we will manage risk accordingly. This isn't just buy the dip and hope it goes higher. This is following the chart and following price action and managing risk along the way. So 542 is a very great risk level right now, and we're currently above it. So I am looking for a push to the top of the range and a potential bull breakout. On the NASDAQ 100 triple Qs, we were up 0.2% today, and once more, just like SPY, we are still stuck in this range, and the range risk level here is 463. Above 463, I'm looking for a push higher towards 473, and then a gap fill at 480, and a top of the range at 482. And if we cannot hold above 463, I'm looking for a gap fill right around 455.58. So right now we are above 463, which favors that we will continue to push higher. But if we do get rejected and we go lower, we will be looking for that gap fill below and that support zone right around 453. Also note today the volume was very low, so the sellers are drying up, because if we are going lower, we are going to need to see a lot more volume than that. Because it's a bull market, we need high volume to go lower, but we do not need high volume to go higher because it's already a bull trend. And in a strong trend, you do not need a lot of volume to maintain the trend. So do not think we need high volume to go higher. We need high volume to go lower. Low volume will be a melt up, which will favor the bull trend, which means we're looking for those higher prices. On the Dow Jones, we were down 0.11% today, and the Dow Jones is still looking very bullish. I'll delete this ugly yellow line, but we have the full bull trend. Price action is above all the moving averages, and we are bouncing off of the risk zone that was supposed to maintain the bull trend, which was between 398 and 402. We're above all of that risk zone. We're pushing higher, and I'm looking for 415 and then 420 as long as we can hold above 398. If we break below 398 and we get rejected from a lower high, then you can start to get risk off in the Dow Jones, but I think that would be a mistake to be risk off in a strong bull trend. On the Russell 2000 IWM ETF, we were down 1.11% today, and price action is still above all the moving averages, and we still have the bull trend. And what you can see here is essentially a bull flag consolidation, which is starting to look like a flat top wedge as we're making higher lows into equal highs. And this means we are just really buying time off the clock as the rising daily 20 moving average catches up and gets ready to push price higher. And as I've told you before many times, I'm looking for 228, but above that, we're looking for a brand new all-time high in the 240s. So right now in the Russell 2000, I think it's a no-brainer to stay bullish above 220. And if you want to get risk off and we break below 220, then you can get risk off. But as soon as we're above 220, it's always going to be risk on. On the ARKK ETF, we were up 0.33% today, and we are still holding above 45.7, and we are above the daily 50 EMA, but we are starting to lose the bull trend. So if the bulls are going to break out, we need to see it very soon with that break above 47, and then I'll be looking for 50.7. If we can't get the bull breakout, I'm looking for a push lower towards 44. On the VIX, we were up 1.28% today, and I'm still looking for the VIX to crush down towards 13. So from here, I would say there's a possibility the VIX could spike a little bit in the near term, but longer term, I think the VIX is coming down very quickly, and that is definitely going to be a scenario I'm looking for in August. So we're on borrowed time for the VIX. I think it's about to start crushing, and that is going to favor the bulls within this bull market. On Bitcoin, we're currently trading just above 67,000, and we did have that bull breakout above 67,000, and we're testing that breakout right now. So as long as the bulls can hold here, we should still push to the top of the range above 71,000. If we can't hold here, then we're looking for support to hold at 65,000, and if we break below 65,000, that is okay to get risk off. On Nvidia stock, we were down 1.3% today, and from here, we are starting to look like we got that rejection from 115 and below the negatively sloping daily 50 EMA, which is putting the support zone back in play between 106 and 109. If we can hold above support, I still think there's a very good chance we push higher towards 122. But because this is a downtrend, I would be a lot more cautious and wait for proof from price that we can get back over 115 before taking that trade. So above 115, I'm looking for 122, but while we're below 115, it is completely fine to remain risk off. But do note we are seeing a drop in volume as we continue lower, so the sellers are starting to dry up. And once the sellers dry up, we will very likely see a very sharp reversal towards that price target at 122. On Tesla stock, we were up 5.6% today, and just last night I told you I was going to give you a crystal ball prediction from yours truly, and that meant from here I was looking for a minor dip towards 213 and then a push higher towards 289. And as of this morning, we gapped up and opened another gap, which is right around 222. And keep in mind, none of these gaps have to fill. These are just risk levels and support zones to pay attention to. We are looking for higher prices. So above 213, I'm still looking for 289. We're back above 230. So above 230, we could also fill a gap at 245. So you have a gap at 222 if we can't hold above 230, and we have a gap at 245 if we can hold above 230. That's the range I would pay attention to, and that is how I would trade it in the short term, knowing that in the longer term, I'm looking for much higher prices. On Apple stock, we were up 0.13% today, and this trade looks absolutely perfect right here, which is the buying of support between 216 and 218 for a push higher towards 232. After earnings, I think we're going to blast through the 230s and hit a brand new all-time high in the 240s, but we'll take it day by day, and earnings isn't until Thursday, so right now in the short term, we're looking for a bounce. If we can't hold this support zone, you have one more support right around 212, and if we can't hold 212, then it's starting to look risk off. So jumping back over to the S&P 500, this is a very exciting week because you have FOMC and you have a ton of earnings reports, including a lot of the big tech names that are definitely market moving stocks that will be very important to understand if they are still doing great earnings with great guidance. But overall, at the end of the day, we are focused on price action on the chart and not any narratives. So while it is very tempting to buy into a lot of these news narratives or topics people are discussing or talks of early recession or earnings degradation, it is all noise and it is all BS. You need to focus on your charts, have a trade plan, be prepared for anything, meaning if we go higher or lower from here, knowing that the odds are still favoring that we continue to go higher. That favors you swing traders to continue to look for those low risk entries during this pullback. And keep in mind that in a bull market, when a pullback is complete and the buyers step back in, it happens very quickly that we start to go higher. So do not miss another bull rally based on just following fear mongering crap. There's always going to be people out there telling you the market topped every time we get a pullback. There's always going to be people telling you that we're heading into another crash or another recession or another bear market. They are like broken clocks. Eventually they will be correct, but those same people tell you that every single time we get a pullback, and they have correctly predicted 100 of the last 1 crashes. So be very cautious following perma bears. This is a bull market, which means we are very likely going higher once this pullback is complete, which means you just need to navigate this pullback in the short term, and in the longer term, I will probably be talking to you in about a month or 2 from now, and we will very likely be at much higher prices. That is not a guarantee. You still need to follow the price each and every day, and each and every day we get more data to make a better decision, and things can change accordingly. So if you want to come crush this market and get access to all of my trade ideas, intraday updates, and technical analysis, that is going to be in my Discord server, and you can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.